Eric Santos at the North Georgia Low Income Taxpayer Clinic. I'm here self-isolating with my esteemed colleague here. And this is part 3 of our series on the tax changes that have happened in response to the coronavirus pandemic. In the last 2 segments, we talked about some of the tax provisions in the CARES Act, that big $2 trillion relief stimulus bill that was passed last week. And today we're going to be building on that and talking about some of the other tax-related provisions of that bill. First, we're going to talk about small businesses. Now, the CARES Act includes a lot of relief for small business that is outside of the tax system. There is a huge amount of money for low-interest small business loans and for grants to small businesses. So definitely look for advice about that as well, but today we're going to be focusing primarily on the tax provisions. The first change that the CARES Act makes is to timing. For small businesses and self-employed individuals, it allows them to defer quarterly estimated tax payments and quarterly employment tax payments, which will definitely help with short-term cash flow for a lot of folks. The biggest provision that we're going to focus on is one that allows certain small businesses and many nonprofits to obtain some cash back for the wages that they pay during these troubled times. Generally, the bill provides that if a business or a nonprofit was either forced to fully or partially close or loses a significant amount of revenue relative to the same quarter last year, then the business can get a credit against their employment taxes, a refundable credit, for up to 50% of the wages that they paid during that quarter. This is subject to certain limitations, but in general, this provision allows businesses that get hit hard by the coronavirus crisis, who continue paying their workers, to have the government foot some of that bill and to help them out in this time. Now, there are some other technical tax provisions related to small businesses in the bill, so make sure to consult with your tax advisor about how they will affect you. But I want to turn back to 2 more individual provisions in the CARES Act. First, the CARES Act defers student loan payments without interest for a lot of folks, which is great. It also allows employers who help their employees pay off their student loans during this period to do that with pre-tax dollars, the same way that they would get for contributions to retirement accounts or for health insurance. So there's a little bit of an advantage for employers who are helping out their employees with their student loan burdens. Second, the CARES Act creates a $300 above-the-line deduction for charitable contributions made in this year. Now, above the line means that you're still allowed to take that deduction, even if you take the standard deduction, if you don't have enough individual deductions to itemize. So that's great. It means that a whole lot of people who generally wouldn't be able to deduct charitable deductions will be able to do so up to $300 this year. And so if you have the desire to pitch in, that's great. And of course, this is great for the nonprofits who have been working so hard to help people in this time of crisis. So that's our segment for today. There have been a lot of tax changes in the CARES Act. If you have questions or need assistance with the tax matter, please give us a call here at the North Georgia Low Income Taxpayer Clinic. And of course, if you're interested in volunteering with us or donating us to help us fulfill our mission, please look us up in the information below the video. Thanks so much. This is Eric Santos, and I will see you next time. Bye-bye.